we're going to start now while everyone enjoying their lunch. So, Assalamu alaikum and welcome again to Jada's annual event. We're very excited today to bring a panel of experts to discuss the recent developments in the market and the challenges and opportunities facing investors in Saudi today. Especially under the recent economic challenges that the markets are facing. So allow me first to introduce our panel. I'm going to start from the far left. We have Walid Fazza. Walid is the Managing Partner and Chief Operating Officer in MSA Novo, a global emerging market investment firm. MSA has holding in MENA, Sub-Saharan Africa, Latin America, and South Asia. Next to Walid, we have Ravi Dakran. Ravi is the founder and chairman and managing director at Turmeric Capital. Turmeric recently launched a GCC Asia Growth Fund, a private equity fund focused on mid-market consumer sector. Ravi, before that, in 2008, he launched El Capita, who developed to be one of Asia's top consumer-focused investors. Next, we're joined by Mohannad Qubbaj. Mohannad is the founding partner of Olive Rock Partners, a private equity manager focuses on controlled buyout in the GCC. Before that, Mohannad was a founding shareholder and an IC member in Gulf Capital in Abu Dhabi, where he spent over 14 years. Last but not least, we have Walid Al-Balla. Walid is the general partner in Sukna Ventures, an early-stage venture capital fund based in Riyadh. Walid has been active in the VC industry since 2015, where he laid the foundations for Ilm's corporate venture capital arm, and also co-founded Riyadh-based STV. So thank you everyone for joining us today. So we have a lot to unpack in today's panel, so we'll just jump straight into it. So as the world emerges out of a tough global pandemic, and we're seeing a decline in an increasing fluctuations and uncertainty in the market, Mohannad, we just want to know, how was this year different to you, and what did it bring in terms of challenges and opportunities to investors?
Okay, well, first of all, thank you so much for having the opportunity and giving me the opportunity to be here. And thanks to Jada for this wonderful partnership. And great to meet everyone here. 2022 has been a very interesting year. It's had its highs and it's had its lows. And when I talk about its lows, it's been a very, very challenging fundraising year. As everyone knows, on a global basis, I think it is probably one of the most difficult years to fundraise as in the last couple of decades at least. So in general, I think people need to be patient, and people need to understand that if you have a very good story and are fundamentally very, very strong, it's just a matter of time and being patient. The positive aspect of it is, yes, we've come out of a pandemic, but what has the pandemic actually given us on a positive side? When people diligence companies and look at the fundamentals of companies and management teams, they look at operational, commercial, financial, legal, etc. Now you can actually have another, let's say, silo of diligence, which is, the COVID diligence. And the reason is, you look at companies that have survived 2 years of a pandemic, and this gives you the insight of how they have survived and navigated a very, very tough time. So it allows us to look at companies, understand how management teams and companies have managed to navigate, how they have managed to mitigate the very, very difficult times. And this is stress testing to the maximum. So it gives us a further insight into quality of companies and fundamentals of management teams. So I think, it's a great, great vintage on all levels. Hopefully next year, when it comes to fundraising, it's going to let loose a bit more in 23 and 24. But overall, this is the right time and right place, and hopefully these are the right teams.
Great. Walid, do you share this optimistic view of the market today? Is it any different in the VC landscape?
So it depends on which vintage you're on, but think about the future, long term, and this is what we need to do as VCs, is think in the next 5, 7, 10 years, beyond what's just the current economic cycle, and see what kind of trends are there besides inflation, and besides the downturn in the market. Digitalization is still in the beginning. Only 20% of workloads in the US are actually on the cloud today. automation is on the rise. Demographics are, more favorable for automation. You also have other things that are very interesting in terms of deglobalization, which is creating this need for technological sovereignty in different areas of the world. And this is decoupling the supply chains around the world. So instead of having supply chains centralized in one area of the world, now you're seeing a lot of the regions are creating their own supply chains as part of their own security and sovereignty. So all of these are actually trends that are favorable for innovation and favorable for getting new investments. If we talk about the local market, especially in Saudi Arabia, it's also a very interesting story where we really haven't matured or saturated the VC market yet. If you compare Saudi Arabia to other countries in terms of the GDP it has and VC ratio to their GDP, we're still in the early beginnings. If you compare it at the per capita number, we just passed the per capita for India, but we're still less than Colombia and other countries. So the space is still wide open for new investments. The quality of the founders coming in is just amazing and improving over time. There's this nexus of also regulation that is viewing the space in a different manner than it used to be in the last few years. And now technology innovation is becoming a priority. So the market is opening up, the TAM is increasing, and for that we're very optimistic.
Great. So maybe Ravi, I would just cover in the same topic. So how is this affecting your investment focus? What investment themes you're focusing on today?
See, look, first, let me touch upon the macro side of it. Look, if you pick up a pessimist lens, you will see a perfect storm in front of you. Geopolitics at its worst, war going on, inflation at the highest, and still no clarity of interest rate stabilizing, etc., etc. And you may think it's a perfect storm. But at the same time, if you take optimist lens, there are still a lot of great opportunities. And if you look at certain geographies, in Americas, Mexico, a real star. In South Asia, India, emerging a real star. Southeast Asia, Indonesia, emerging a real star. But I can tell you none of them are as big emerging star as the Kingdom of Saudi Arabia. Here, whichever nation, when leadership of the country, industry, and society at large converge together with one single goal to get ahead in life, I think wonders get done. And I genuinely believe that we have that momentum here in the kingdom. And we're very proud, therefore, to have a platform based there. And again, I must congratulate Mr. Mazen Al-Jaber, Mr. Adil Atiq, and all to create this platform. A few years ago, it was a trickle. It's already a wave. Look at this room. I guarantee you, 5 years from now, it'll be a high tide. We'll be celebrating. And you'll be celebrating your own propulsive effect you had on creating the VC and private equity community. So coming to your direct question, what are we focused on? Look, I've always been in consumer all my life. Worked with, Tata Group, Swatch Group, and last 20 years with Louis Vuitton, my Hennessy Group. And we know consumer well. We've invested in all of the mainstream Asia. We want to bring that experience here to this market of building world-class brands, of building a bridge between Asia and the kingdom. In the past, most companies from here looked at West. I genuinely believe there is a great opportunity on the East as well, and we want to be a bridge for that. But in terms of categories, we've always been focused on three things. Anything women are after, anything youth are after, anything kids are after. So sorry, men, your turn will come later. But we are certainly focused on these three categories.
Great. So you touched on the Chinese and or the Western and Eastern point of view. So historically, Saudi have been looking at the West for rebranding and expansion. Is it, you think, time to start looking more on the East now?
Yeah, look, again, East has gone through its own cycle. So Asia has gone into waves. So first wave, we call it Asia 1.0, was led by Japan, Korea, Taiwan, a little bit Hong Kong, Singapore. That was 1960s to 1990. They led the wave, because most of those countries grew at 5% plus. Second wave were primarily led by one single major player, China. That's 1990 to 2020. And that economy grew at average rate of 8.9%, which is massive. And they took out 780 million people out of poverty during that time. I believe we already have the third wave starting, which is Asia 3.0, which will be led by countries like Kingdom here in this region, led by India and South Asia, kind of like Indonesia in that. And I think this is the real wave that is now already emerging. And in this wave, one of the key themes would be, don't look only at West, look at East as well. And because East has become the biggest market. I'll give you an example. The total consumption in Asia in 2000 was 1.4 trillion. It was 11 trillion in Europe at that time, 10 trillion in US. It was 1.6. The same consumption in 2010 became $4.6 trillion, while US and Europe grew up from 11 to 12 and 10 to 11. The consumption, same consumption 2020 is now 14 trillion, is higher than US or Europe. 2030, it'll be 34 trillion. It'll be bigger than all of them put together. So if the biggest part of the market is going to be Asia, it's high time we start to look at Asia. Secondly, I also would message, Middle East is the wrong word. It was an American's mistake in 1901 when he started to call this region is West Asia. We are part of Asia. Culturally, we are so much closer to Asia. So many stories from here translate so very well there. I think certainly we have a lot to win by building a bridge to Asia.
Great. So, Walid, clearly data is showing that it is time to look at the East. Do you agree with Ravi's view?
Yeah, I think there's a lot of things going for this region that are very unique, that are not available anyplace else in the world. I think we can make comparisons and we can see the differences that are happening. So from a Chinese lens, where we come from, we invest in mobile first, fintech, logistics, and consumer plays. And we think that that's a huge opportunity that is still widely untapped, just because of the age of the consumers that we have, the internet penetration, the e-commerce that needs to go forward. We still think that it's a huge gap here. Some of the similarities that we see from the East as well, and coming from China, is the ability for the government to come in and play and protect the environment, such as these funds, and start to grow the ecosystem and then let it expand. So the ability for the government here and the vision to be able to do something like that, these are tried and tested things that have happened elsewhere, and I think are very significant. We also need to talk about talent. So when we started a few years ago looking at where are we going to invest, not just at the sectors, but where is the talent that we can actually invest in that are going to grow these great companies, we had great talent, but now it's gone exponential. And I think a lot of people from the region and also expats are noticing the opportunity that's here. And we think that this is one of the last places on earth, which is the Middle East and Africa, that has this untapped opportunity for people to come and build with technology models that have been, that are top of the line, right? And we think that it's the Eastern technology models, the ones that are going to win, rather than what we've seen at the West, because of the adoption rates, because of the ways that there's high frequency getting on a platform, and then using other services to bring them in and to increase their revenue. So for us, it's still a greenfield, and we're still at the very early days of it, and we think that it's going to hopefully expand from here.
Agreed. So, Ravi, just staying on the China topic. So, given the similarity that you've mentioned, people are now recollecting the Chinese market boom. So, do you see any similarity of what's happening today in Saudi with that? Is history repeating itself?
Look, one has to go back a little bit in time. So, I lived in China from 92 to 2000 in Beijing, 2002 to 2008 in Shanghai. So, I've lived fairly long time and saw the move. 92, when I first moved to China economy was 1/3 the size of New York City economy. New York was 3 times bigger than China's economy. In 2000, New York City economy was still bigger than China, but then they took off. Why? Because as I was saying earlier, when the leadership, when the industry, when the society all get together, where regulation instead of becoming a hurdle, become a propulsive force, all the things come together. When parents are ready to send their child thousands of kilometers away to work because they just want them to succeed in life, that passion, that zeal with which China worked, I genuinely see that here in the kingdom today. It didn't exist 10 years ago. Maybe 5 years ago also it was not there in play. But today, I genuinely see that. And particularly amongst youth, the first time you start to see when your children who went to United States or UK to study, they want to come back because they see better opportunities back home than staying in US. That is a precursor of this. So I genuinely believe this is China 2000, 2002 10 years from now, like books got written on China in 2020, same way books will get written about the kingdom. However, we must learn China also made many mistakes along the way. They also had many falls along the way. They also had a lot of policy challenges. Even today, they have, for example, property market has to go through fiscal reform, without which it won't really come back to health. So I think I genuinely, and I gave example of Mexico, India, Indonesia, I genuinely do not see any economy where all the variables that you want to, as Americans say, all ducks lined in a row, here generally you have that momentum. And therefore we are most excited about really finding opportunities here. And secondly, let me give another example is, sometimes Chinese didn't believe in the beginning on their own. It was all about Western brand. I want to have Omega watch or Rolex watch to show that I've arrived in life. Or women wanted a particular kind of bag or particular shoe to declare they have arrived. But today, the same consumer starts to believe in their own culture, start to believe more in their own success. And now you see the emergence of many brands coming from Asia. And same way, I genuinely believe here, again, there are a lot of brands. And give you two examples. Just now, World Cup has just finished. In World Cup, there are many restaurants went and put up their pop-up stores. Some people put big ones. But the number one was M. Sharif. Number two was Namos. Number three was Zuma. So because on cultural affinity expressed in a great way mentioned. When Al-Baik, just a Jeddah business, goes to Dubai Expo, becomes the number one pavilion to be visited, not even Dubai's own pavilion. And Batil today, you go and find it in Mumbai and London and Detroit. I think we have it to make it world class. We have the elements. We just need to learn from the West on how to really do 100% right, how to package well, how to tell a story well. If we learn all those things, I think we can generally build world-class things.
I think we're there, and I think our people here in the region are very resilient. So I think the fear of what's going to happen geopolitically, we've been living with geopolitical stress all of our lives, and we've been able to navigate our way outside of it as well. So all the fear that sort of clouds our region, saying, don't invest there, it's too risky, what's going to happen, the founders, the exits, I think we've already started to perform, and I think it's just going to go further because of the resilience of the people, right? So I agree with the vision, but I also think that we have the right raw materials in terms of human capital to take it to where it needs to go.
And one additional point, sorry, quickly to mention about China is, today, unfortunately, various forces in the West are counting China out. A lot of geopolitics of the world is working against China. I am very happy to see the kingdom took a different route, to stay open-minded and stay engaged. It is the second largest economy, just a shade smaller than the biggest economy, is still rising much faster than any country in the West is rising. I would say you're doing the best thing by not counting the dragon out and in fact staying open to it.
I agree with what both of you have said, but what's very, very interesting, and the word you use, the operative word, is learning. So I think over the last 2 decades, this has been a region of trial and error for a very long time on all alternative asset classes. And what we're seeing here and what we're seeing in this room is a lot of new funds and new managers who've actually learned from a lot of mistakes and elevated to VC 2.0 and private equity 2.0. Because if you looked at it, around in 2004, you had what people called 126 alternative asset managers here. So anyone who sold 1% of their company to a private, in a private transaction, they became a private equity player. Then that became screened down and refined until maybe around 10 years ago or 5 years ago, you had like 5 to 15 major players. We are seeing the new up-and-coming refined managers who are going to add value to the society and flourish in a region that is going to embrace them because you have the infrastructure that supports them. And looking at the region here, if you go to international investors and you explain, why come and invest here in the UAE or in Saudi Arabia or in Kuwait, you look at, even though it's far for them, they're like, oh, it's very, very dangerous to invest there. No, this is as developed as the best countries in Europe. Yep. This is as developed as Singapore. It's more developed than a lot of the US. But what's exciting here is you have the best combination. You have first world economics and third world demographics. And as a combination, that is second to none. Plus, you look at the region, you have political stability, you have no business risk, But most importantly, for all international investors, you don't have foreign currency exchange risk. So as a new area compared to other emerging markets, you definitely tick a lot of boxes. And this is the time for us, as you said, everything is aligning and you have all the headwinds. This is the time to be in the region, the right time, the right place, and the right teams here as well.
If I can add to this very rich discussion, I think in terms of timing, there was an inflection point, especially for Saudi, in terms of breaking a psychological barrier that was there. We used to think that we are consumers and we just submitted to that. Now we're seeing all these success stories and lo and behold, we actually have companies exporting their services and tech companies going outside and competing on an international level that now we were thinking, no, we can actually compete and we can actually build these technologies and be at the same level as other countries as well. So I think that was also a very important psychological point that not just impacted the founders, the investors, but also leadership and governments, where now they see, well, there is a new engine of growth for the economy that we can benefit on. And that has been a big push and a tailwind for lots of the optimism that's happening.
Great points, really, by everyone. And clearly, the private equity managers on the panel thinks that the stars are aligned for the region and maybe for private equity in particular now, because VC has been having a very dynamic market in the past few years. So maybe because of that, people are having more concerns now when it comes to valuation. So Walid, what are your takes on valuation today and comparables in light of the changing dynamics and in the global economic markets?
Well, valuations are going down, that's for sure. And also the number of deals in the VC space is going down. There's lots of uncertainty, and that is causing some hesitance in this asset class. So last year, more than 50% of VC investments or investments in startup in general were made by non-VC funds, non-traditional venture capital funds, whether it's their family offices, corporates, strategic hedge funds, and that kind of skewed the way that the asset behaves. And we saw a lot of companies that should not be VC backable assets become the focus of VC type investments. So now we're unlearning. So the theme was, what are we learning? Actually, we're unlearning some of the bad concepts that we had before. And there's this separation between what is tech-enabled and what is actually tech-driven. And the main difference is their ability to generate free cash flow. The cost structure is different, the margins are different, the growth trajectory is also very different. And yet in late 2020 and until recently in 22, in the early quarter, a lot of the investors didn't make that differentiation, and they were giving tech-driven multiples to tech-enabled businesses. So a lot of the drop in the valuations that happened in the market, I think, is because of that lack of differentiation between very different types of businesses. Another was momentum. So if you look at the SaaS multiples, for example, they're actually below their historical averages. And some of it is actually structural. So again, in the SaaS example, a lot of the categories inside SaaS are actually now not VC backable anymore because they're very clear and they now have other options because they're not as risky of getting funding, and it doesn't have to be even equity funding. So we saw companies like Clearbank, Pipe, and others come to actually think about how do we give lending products to such companies, knowing how they behave and knowing what kind of data we need to look at. So VC for me is always on the leading edge of technology. If you don't move with the edge, then you're taking risk and you're taking a liquidity that is not justified. So I think in the next 2 or 3 years, we're going to see that kind of realization of what is private equity and what is VC, and the multiples are going to be very different between them. And this learning or unlearning process is going to have some casualties, unfortunately, and we're already seeing it here, even locally in the market, of later stage and growth stage companies, where some of them are actually cut in half in terms of valuation. But I think that's a correction that was actually needed. Long term, I'm still very optimistic. We are seeing other signs besides just valuation. And when you talk about quality companies, which is the sole focus of any investment, but especially so for VC, where you want to focus on the outliers. If you're, working on stuff that is not outlier, then I doubt it's really VC. You're competing with the rest of the market. So if you're looking for outliers and you find a strong team focusing on a very huge problem that is actually viable, then it's worth the risk and the illiquidity, and then it's a very different discussion about what valuation you should be paying. And in fact, you could actually afford to overpay a little for those types of companies.
So, Walid, obviously the region have seen some painful stories for companies that weren't supposed to be backed by VC companies. So what are your take on selecting those companies and valuation, in particular for the VC funds?
We've been holding back because I was questioning myself in 2020, 2021 if I had lost my business sense, because I got into the habit of fear of missing out, because all the funds were investing in these companies and the valuations were going high, and it's like maybe I forgot how to invest, and it was very difficult to reel myself in and just be quiet and say, actually, I cannot underwrite a valuation that this company is getting because it's mindless. But I felt like everybody was losing their minds at the same time. And there was this moment in time where it's like, should I lose my mind as well? Because everybody might make money at some point. And it was very difficult. And I think that's where global institutional capital that comes into this region can actually help create a benchmark on what is investable and what is hype and how to navigate the space. So it was very difficult for us to hold back. But we did, and we think discipline, integrity, understanding the core business KPIs of a company, that should really be our decision-making process, and not because Flan or somebody else put in some money and oh my God, look how much they've, in 6 months they've quadrupled their valuation. So it was a time which was very testing for us. As Muhannad said, it's continuous learning. And the ecosystem today is going through growing pains. Those that are not patient with capital, that are not in this asset class for the right reasons, are going to suffer. The entrepreneurs that came in and thought, I can write anything in a presentation and send it, there's so much money around and I'm going to get the valuation I need. We actually had entrepreneurs come to us and say, ما بدك راي عند حدا تاني. It was their market. And it was very difficult for us to say, but we have smart capital to give you. They didn't want to hear it. Today, it's a little bit of a sobering moment for a lot of these companies. A lot of them will not be able to go forward. A lot of them are going through down rounds. And there are some catastrophes. And these lessons learned are scars that we will learn from, and we will be able to build a much healthier ecosystem as we move forward. And I think there's a boom and bust in every business decision, and there's risk and return in everything that we do. The people that are going to be patient to grow through this moment in time are the ones that are going to be able to reap the benefits. But it's painful. And as also Muhannad said, fundraising this year is a killer. So a lot of people are not, or a lot of companies are not going to be able to achieve the projections that they had. But I think it's to the benefit in the long term to who we are and how we grow as a resilient economy that is able to go through the highs and lows. So I think in the long run it's good, but it's very, very painful to hear these things.
Yes, Muhannad?
And it's also about changing the mindset, not just the entrepreneurs, but also the investors, okay? Because when investors are looking at the market and, fearing that they're going to be missing out, the trend has been in the last several years is to invest on a deal-by-deal basis. And we all here manage funds, but there's a reason we manage funds. If you bet on the wrong deal, or you bet on 2 deals in a row that are the wrong deals, then you've burnt yourself, all right? However, when you invest in a fund, especially in private equity, for example, you're looking at, fund investors who are going to invest in 10 deals. 2 will do very poorly, probably. 6 will do okay, pretty well. 2 will do exceptionally well, and you'll do very well. On the VC side, it's even more than that. You're going to invest in 20 or 25. 3 will be out of the ballpark. You could, 10 could actually go to 0, and the rest will teeter along. And unless you are a genius, investing in a deal-by-deal basis is very difficult. So the reason I'm saying this is at the end, even though you're betting on portfolio companies, you need to bet on a strategy and a management team. This is all about people. Have they done it? Not have they done it well, but how have they actually tried to mitigate and to fix and to mend poorly performing companies? How have they been burnt? How have they reacted? What are the bad stories before the good stories, and how they have learned? So back to learning again, and this is the premise on which funds are based. So once again, it's also changing the mindset of investors, and we are seeing that. People are understanding what private equity fund investing is, what VC fund investing is, because here in the region, even up to 10 years ago, it was all about deal by deal. It was the whole idea of InvestCorp, which started in 1984. I worked with them on the private equity side in the UK, but they were all based on deal by deal. But if you ever look at InvestCorp, and anyone who ever sells you an InvestCorp deal, they tell you, listen, this is the deal. It depends how much you want to put in it, but our advice is you do 12 consecutive deals. If you don't do that, then you're going to take a lot more risk than we want you to have. So it's all about a combination of the mindsets, a combination of what's portfolio companies and also investors to create the platform and the ecosystem that's going to be successful.
Failure. And
Yeah.
what we're hearing now is massive failure and people standing up and taking the responsibility if they do. And that's going to set apart if they're going to start a new startup or not, and if you're going to invest in them or not. But this fear of failure that we had in terms of the mindset prior to this asset class coming in, and for us seeing the failures that we have, it wasn't there. And we were never going to learn from that. So
Yes. No, that's a great development in the region, because the shame of failure is one big cultural difference between the region and the state. So it's good that this is evolving. Ravi, did you want to add anything?
I wanted to just mention, I would be remiss if I do not talk about the challenges, because we talked a lot about ducks lined up,
Yeah.
great opportunity. While that is in place, I think the region certainly has a few challenges. One, it is still difficult to attract international capital to this region, regional funds. And it's primarily a result of a few things. One, the pension funds in US or Europe or the insurance guys, they still more or less look at this region based on what they read in the media. And the media, of course, as you know, sensationalism, negative news sells much better than positive news. And still there is that effect of that. Second one is the funds, most of the funds here are in the cycle of first or second cycle, or first fund or second fund. Most of these pension funds, particularly in a region far, they would always want to see you through few cycles, then invest. And third is certainly people say, hey, I consider Asia risky. I need to have a very high risk premium for capital I put in. So I would say fundraising has been a challenge, particularly to attract international capital. Additionally, this year, as Mohammed mentioned, this year was particularly challenging for everyone. It was a rule of 80-20. 80% of capital went to 20% of the funds. And very challenging for newer funds to attract capital. Technology, which 15 years had a great run, also hit a headwind, particularly the software investment from all growth platforms. So all of that led to the challenge. So I think challenges are there. The other part, coming to the whole valuation, whenever a market takes off, you'll always find these waves. But there will be vicissitudes. Initially, a lot of hubris, valuations go crazy, and then correction happens, things get stabilized, next wave again hubris comes in. I think we will see those vicissitudes in play here for some more time to come. And the players, as you mentioned, with scar tissue, combined with learning from the scar tissues, will get wiser. So we always believe in investing with, when you invest, you look at all three things. If you want to win a horse race, you need to know your track very well. You need to have a great quality horse and need to have a great jockey. All three have to be right. So the track record is the category you're investing in. You need to believe the category has tailwind. You need to have, finally, don't invest in a category, invest in a company. All the fundamentals of free cash flow, like Walid mentioned, or all the quality of team, all these have to be very important. Finally, the leadership is very, very important. Are they aligned with your vision? Do they have a real plan to deliver on that vision? Has to all line up. Eventually, quality of business is the best hedge against any cyclicality. So be ready to pay a little bit more, as Walid was saying, instead of trying to just say, I got the best value.
Absolutely.
Invest in high quality businesses, great quality leadership teams, you will win.
Absolutely.
Thank you.
I just want to qualify something that was mentioned about failure. And I think my fellow panelists agree. The goal is not failure per se; it's learning, right? And getting proprietary learning. Only you're glad you failed if that was the only way you can learn. But if you can learn from the market from other ways, then that's a failure that you don't want to celebrate. So I want to, just because we have some fellow panelists from the private equity world, something that I've been personally thinking about a lot is, VC asset by design, by definition, is a very small asset compared to private equity and other assets. And it's by design because it doesn't scale as other assets. The problem that happened the last 2 years is people tried to treat VC as these other assets, and that's where we had this crazy growth of multiples and valuations and the problems that it caused. And our relationships, or I should say our relationship with uncertainty was kind of damaged during those 2 years. For VCs, uncertainty is actually a plus, not a negative. And if you try to reduce uncertainty in an unnatural way, and this is what happened last year, where some VCs tried to get into companies that were doing a solved problem in the market, that where the competition in that market, the rules of competition, was not because of innovation and new technology that is proprietary with strong moats, competitive edges. It was rather on probably scale, spending, marketing, branding, or something else. That's where VCs got into trouble. They tried to move away from uncertainty and get that uncertainty, and they ended up in a space that they shouldn't be in, and overpaid a lot for these businesses. So, for example, Thoma Bravo recently, last week or a couple of weeks back, they just acquired a software company, and we're seeing now more than 1,000 actually acquisitions by private equity in software companies, which tells us something, that not all of software today is VC. And that we should have that kind of focus as VCs, where we want to invest, where we need to take the risk, where there's a symmetry between the upside, which should be unlimited, and the downside for us is zero. If that asymmetry is not there, and I try to reduce uncertainty, I'm reducing my upside. And if I do that, then we're not VCs anymore, and we're just trying to play a game that is not the game that our LPs want us to be in.
But I just want to say one point here.
Okay.
The exciting thing about being in this room is it's important to know that this is an ecosystem.
Yes.
When it comes to VC investors and GPs and private equity investors and GPs. And unlike what has happened in the last decade and a half, where people try to outshine people by treading on them, I think this is the time where everybody needs to support and to lift everybody, all their peers up. This is extremely important. So, this is very exciting what we have here, but every VC company and every private equity fund should lift their peers up, because at the end, people need to see depth in the market, number one, and you are going to be each other's exits or each other's feeders in the future. So this is very important. This is collectively working together and supporting each other is going to be a success for everyone. It's going to be the tide that lifts everyone up. And this is something which we haven't seen in the past, but I really hope with the private equity 2.0 GPs and VC 2.0 GPs that we see this camaraderie going forward.
It's the responsibility of all of us in the room, if we want to take this asset class to the next stage.
Exactly.
That we do that, because if international capital comes in and puts something into a bomb, they're going to run away and never come back again.
Absolutely.
Absolutely.
So unless we do it properly, then it's all
It is, as I said, whenever a wave happens with hubris, obviously there is a correction. And sometimes you can get very pessimistic when a correction happens. I genuinely believe that is the time when also, when wind is blowing well, even a turkey can fly.
Yeah.
So you separate the falcons from turkey only when wind is not blowing. And this is the time for real falcons to rise. And you will have natural selection through this process amongst managers as well.
No, we
Thank
see
you.
with the likes of Olive Rock and GCC Asia and many other PE coming into the market now is this story is completing, and these companies graduating from the VC are finding other backers to continue their success. So we wanted to cover a lot of subjects with you today, but just conscious of the time, I'm just going to open the floors for the audience for any questions.
They know it all.
After lunch.
Okay. Yeah, I think everyone is
There
full.
we go.
Sebastian has a question.
So, thank you so much for coming on the panel and for being here. I'd love to have your opinion on how Jada going forward can continue to support you.
Is that for all of us? But yeah, perfect. Well, honestly, number one is, let's put it this way, the diligence process with Jada was probably the most rigorous process we've ever been through, and we appreciate that because we've learned a lot through it. And you know, as Adil mentioned earlier, when you put in a certain amount with Jada, you have people who will actually follow that these are the leaders when it comes to investing. And you know, we're hoping for the 5 times as well going forward. But I think in terms of the relationship with Jada, we really like the idea of this cross-pollination we're seeing. We would like to see a lot more of it. So on a more frequent basis, on a more focused basis, this is very important because all of us here have spoken to each other, and definitely you're going to create at least 4 or 5 synergistic relationships based out of the discussions today. When it comes to introductions, for example, when it comes to support navigating the investment system or the regulatory system, at least we have a contact there to help us with that. But all in all, I think the relationship where we are already entwined in is going to yield a lot of results, and it just has to be a bit more formalized potentially, and those discussions become a lot more frequent.
Duly noted. Jada's team are taking notes on that.
Yeah, and I see the smiling in certain places.
I want to expand on that a little bit more. Jada are in this fantastic position of a vantage point where they see everything. They see all the funds, they see all of the different companies, and us on our fund manager side, we don't get to see that vantage point. So it's very interesting when you have that kind of data to be able to maybe focus on championing a winner in the ecosystem through getting multiple funds or specific companies to get to the next stage. As you are able to see all of these things happening from your vantage point. So it's interesting when we're doing the reporting, you know, Jada has been great at coming back to us and saying, actually, please check your numbers because we're getting it from someplace else that doesn't look like yours. It's honestly amazing because you have that kind of depth and data that allows us to all work together to champion winners in the ecosystem. So it's not about, you know, I've done wrong things and I'm okay to say it, but it's great that you have that ability to see what's happening on a regional and global scale to be able to help us to go to where we need to go.
And actually, just to add on to that, in a previous life, we had an investor from Asia who is one of the largest private equity investors in the world. And very interestingly enough, as we were looking at one opportunity in a business services subsector, they came and told us, we have 2 funds in Europe that have actually invested in the same sector and very similar companies, and they made those introductions. So this cross-pollination between your underlying portfolio companies, because of this vantage point you have, is extremely helpful. And at the end, you know, it's going to benefit everybody and multiply and compound the results.
I love this question, and a few things that I can think of is the LP community. Jada now is in a position where it actually can help mature the LP community in the region, share the learnings with them, help them come up to speed with the learnings that Jada has. The second one Walid mentioned about data, I think there's lots of thirst for data. It's very important for our growth as well. A third one is, and probably I think maybe Jada's already thinking about this, is how can Jada actually help make these funds a bit more or less correlated, right? A lot of the funds today are focusing on certain areas in the market. So how can we have more diversity and less correlation between them? either with maybe changing some of the governance structures that Jada requires for these funds, which limits what they can do or cannot do, or maybe working with other stakeholders, for example, energy sector or international, to help open up new spaces for investment.
I would say quickly, first of all, thank you for all the support. I've built 3 consumer funds in Asia, going up to 1.5 billion or something in real estate. But starting as a new fund in the region, you need somebody to believe in you. And you guys believe in us, so can't thank you enough for that. And so have you and so many other managers. I think a player like you was needed as a catalyst, and you all genuinely are a catalyst. So thank you for that. There are still some challenges remain. So give you for VC again. The market has been pretty well developed, and there's much more growth there. For the growth equity issue, particularly if you want to go for a mid-sized fund, there are 2 challenges. One challenge is that if you come in with as an investor, we're saying that we would be, let's say, 10% or 15% of a fund. Challenge for, as I said, international capital to be raised for the region is difficult. DFIs like IFC and CDC and ADB and all these guys, they say, oh, Saudi Arabia and UAE are not developing countries, so we can't allocate. If you go to the big pension fund, we don't know the region well enough, and you are in first fund cycle or second fund cycle, we want to see you a little bit more. If you go to the big family offices here, from whatever, Fazilias or Kingdoms or whoever else, I can name 20 of them, they all say, we have enough investments here, we have enough exposure here of our own, we try to invest in US and Europe. So there are various things so I would suggest that structurally, if you can look at how could we, on these percentages, can work on that, that could be huge help. Secondly, I must say, the kind of community you are creating through this event itself is fantastic. More of these, again, today itself, I think I met 8 or 10 of my fellow people from the industry for the first time. And I'm sure all of those will become 20 interactions next time. It's fantastic. So please keep up this work. Do more of this, I think is fantastic. One thing I could say we can do from our side is all of us, of course, are good in something. We all have as best practice. Again, the deep knowledge of China through their Connect, or branding and, let's say, building brand for us or something others for us. Use us for cross-pollination, because you are the central body. You would hopefully know our strengths and use us for that. We want to be small little microcosm for you in your universe of catalyst work that you are doing. So please use that as well. We would be very happy to contribute to that. Thank you.
Thank you very much for your question. This is very useful for us as Jada to consider and hopefully deliver on that. So just conscious of the time, I'm afraid we're just closing soon. Just before we close, we just want to know what is your expectations to next year? Maybe start with you, Walid.
2023 is still going to be a very tough year. I think we're going to see, the crash really hit globally in Q2 2023. I think fundraising is still going to be difficult on a global sense. And I think, like I said before, the opportunity is as some of these companies go bust, a lot of talent goes into the market. We can go and start seeding these companies and really helping them go to where they need to go. So there's a lot of long-term, beautiful, positive outlook. We have to be very patient, but I think we're still going to see 2023 be a difficult time for us to survive.
Yeah, Ravi?
I will endorse that view with say that in all emerging markets, be it Latin America, be it East Asia, be it in this region, there is always the issue. When you look at 1 year from the previous one, you can easily find vicissitudes in that, as mentioned earlier. If you look at 5-year horizon, you'll find a secular growth. Yeah. So look at slightly midterm view with that in anything you do, and you will take better decisions. Don't take everything based on short-term decisions.
So I agree with both of you, and I endorse that, but I just want to add one more thing. At the end, I'm going to repeat this, it's all about management. We've just come out of a pandemic, we've just come out of a very tumultuous second half of 21 where everything rose, 22 where the markets have crashed, which will continue probably into next year. at the end, how have excellent management teams navigated this? Bet on the management teams. Yes, the sectors and subsectors are the main tide, but the people who are sailing the boat are the management teams. And for us, we believe in backing excellent management teams that happen to be managing great companies. And there's no time where this applies more than today. And I think in 23, you're going to see the emergence of those teams. So we're pretty optimistic.
Great. Walid?
Well, for 23, we see the economy of GCC and Saudi in particular is still going strong. Early stage worldwide is a bit insulated from the macro. And we are big believers that today it's a time of building. So in 23, we expect to see more infrastructure plays, more deep tech plays, strong founders coming and taking on these challenges. And we're going to be focusing on those quality founders and quality companies going on, but we still expect a bit of a failure rate, and that is causing valuations to go down. So one immediate consequence of the valuations going down for us is we actually lowered our reserves a bit so that we can make a little bit more new checks and increase the diversity we have a little bit more. But we remain strongly optimistic with the 5-year, 7-year kind of time horizon.
Great. Great to see.
One gentleman there had a question. He had raised his hand before. He didn't. So it's been answered now? Okay.
Can I just say one more thing? Mergers and acquisitions are on the rise, and I think that's a fantastic thing. It's a phenomenon we haven't seen in the region before, and I think now because we have some distressed assets, we're going to see a lot more symbiotic kind of coupling together, which is a sign of a very healthy ecosystem, and it allows things to move forward. So everybody who wanted to start their own company and had big egos and didn't want to talk to somebody else now deflated a little bit, happy to have the conversation, and I think there's going to be a lot of value created.
Amazing, and great to know that all our panelists look at the market from a very positive view. With that, Jada's annual event for 2022 comes to an end. So I would like to thank our panelists, of course, first for the great discussion and the necessary diagnosis of what's been happening in the market. And of course, our great audience for your engagement and participation in this event. We hope that we would have more time for question and answers, but I'm sure our panelists will stay for any side discussions you want to have. We hope that you found this discussion to be insightful, and you leave the room with a little bit more prepared for what's happening in the market. Thank you very much again, and we look forward to next year's event. Thank you.